Welcome to Wealth Nest, your home for traders, thinkers, and financial freedom builders. Whether you're just starting out or sharpening your edge, you're in the right place. Be sure to subscribe, like, and turn on notifications so you never miss a powerful insight. Just a quick heads up, all content here is for educational purposes only. Nothing shared is financial advice. Always do your own research and manage your risk wisely. Before we dive in, here are the main subtopics we'll cover in this section. What SMC is and why it sounds so appealing. The core ideas behind SMC like order blocks, fair value gaps and liquidity. How SMC compares to traditional trading strategies. And why so many traders feel like they've finally found an edge with this approach. Alright, let's break it down. You've probably seen the term smart money concepts or SMC all over YouTube and TikTok. It sounds impressive, right? Like you're getting a secret look into what the big banks and financial institutions are doing. The basic idea behind SMC is to trade alongside the smart money, the big players who supposedly move the markets. Instead of using traditional indicators that lag behind the price, SMC focuses on reading the price action itself. It's all about figuring out where these massive institutions are placing their bets and trying to catch a ride on the wave they create. This approach promises a deeper understanding of why prices move the way they do. At the core of SMC are a few key ideas. First, you have order blocks. These are specific areas on a chart where big institutions likely placed a large number of orders, causing a significant price move. Traders watch these zones expecting the price to return to them and react, creating a potential entry point. Then there are fair value gaps, or FVGs. These are price imbalances, visible as large candles on the chart where price shot up or down so fast that it left a gap. The theory is that the market will eventually come back to fill this gap, offering another trading opportunity. It's like the market left an open door and will eventually circle back to close it. Next up we have liquidity. This is probably the most important concept in the entire SMC framework. In simple terms, liquidity is where the money is. It's found above old highs and below old lows, where a ton of stop-loss orders from regular retail traders are clustered together. SMC traders believe that the smart money intentionally pushes prices toward these liquidity pools to trigger those stop-losses. This action gives them the necessary volume to fill their own massive positions. So instead of placing your stop-loss in an obvious spot, you learn to see those spots as targets for the big players, which completely changes how you view the market. So, how is this different from your standard trading strategies? Most traditional methods rely on indicators like the RSI, MACD, or moving averages. These tools are based on past price data and often lag behind what's happening right now. SMC, on the other hand, tries to be predictive. It teaches you to analyze the structure of the market, identify where institutions are likely to be active, and anticipate future price movements. It's less about following signals from an indicator and more about reading the story that the price chart is telling you. It feels like you're finally in on the secret, trading with a real edge instead of just guessing. In this section, we'll break down the main reasons behind the explosive popularity of smart money concepts, or SMC. We'll cover the compelling narrative that draws traders in, the powerful marketing and social media influence, the sense of community and exclusivity, the appeal of structure and logic in chaotic markets, and the hope for financial freedom that keeps people coming back. So why did smart money concepts explode in popularity? It's simple. It tells a compelling story. The narrative is that the market is rigged against the little guy, the retail trader. We're told that traditional technical analysis is flawed because it's what the banks want you to use, making you predictable. SMC comes along and offers a way to flip the script. It promises to teach you the real way the market works, letting you trade with the institutions instead of against them. This idea is incredibly appealing, especially for traders who have been struggling to find consistent profits and feel like the system is working against their success. The marketing around SMC is also incredibly effective. You see countless videos and social media posts showcasing massive wins with tiny stop losses, leading to insane risk-to-reward ratios. Influencers display charts with perfectly marked up order blocks and liquidity grabs that led to huge, fast profits. It creates this illusion that SMC is a foolproof system for printing money. People who are tired of losing or just breaking even see this and think, this is it. This is the missing piece I've been looking for. The promise of high-precision entries and a logical framework for understanding every market move is almost too good to resist. Another major reason for its popularity is the sense of community and exclusivity it fosters. Learning SMC feels like you're being initiated into a secret club. The terminology itself, breaker blocks, mitigation, inducement, sounds complex and sophisticated, making practitioners feel like they possess knowledge that the average trader doesn't. This creates a powerful sense of belonging and intellectual superiority. When you're part of a group that believes it has cracked the code, it reinforces your own belief in the strategy, even when you face losses. The community provides validation and keeps you committed to the method. Ultimately, people flock to SMC because they are searching for certainty in a world of uncertainty. The financial markets are chaotic and unpredictable, and human beings crave structure and logic. SMC provides a neat, rule-based framework that seems to explain every single tick of the price. It gives traders a sense of control. They believe that if they can just master identifying these specific patterns, they can predict the market's next move with accuracy. This hope, the hope of finally conquering the market and achieving financial freedom, is what fuels the SMC hype train and keeps it rolling forward, attracting new believers every single day. Before we dive in, here are the main hard truths about smart money concepts that we'll be breaking down in this section. The myth of guaranteed profitability. Misconceptions about order blocks and fair value gaps. The emotional challenges SMC can't fix. The false idea that SMC works the same in every market and time frame. Now let's get down to it and talk about what the gurus don't always tell you. The biggest myth is that SMC is a guaranteed path to profitability. You see the perfect examples online, but in reality, trading with these concepts is incredibly difficult. Just because you can spot an order block doesn't mean the price is going to respectfully turn around right where you want it to. The market can, and often will, blow right through these zones without even slowing down. There is no strategy, including SMC, that offers a 100% win rate. Believing that it will fix all your trading problems is the first step toward disappointment and a blown account. Another huge myth revolves around the magic of order blocks and fair value gaps. New traders often treat these zones as infallible signals. They see a gap and immediately place a trade expecting it to be filled. They spot an order block and enter a position without any other confirmation. This is a recipe for disaster. These zones are simply areas of interest, not guaranteed entry points. The smart money isn't just mindlessly defending every single order block. Context is everything. Is the market trending? Is there major news coming out? Ignoring the broader market environment and blindly trading these zones is one of the fastest ways to lose money. The third myth we need to bust is that SMC can solve your emotional trading problems. Many people jump into SMC thinking that its logical, rule-based approach will eliminate fear and greed from their trading. The truth is, no strategy can do that. If you have a tendency to revenge trade after a loss or get greedy and move your take-profit target, SMC won't magically cure you. In fact, because SMC trades can look so perfect before they fail, the losses can feel even more personal and frustrating. This can lead to even worse emotional decisions. Discipline, patience, and emotional control are skills you have to build yourself, separate from any trading strategy. Finally, there's the misconception that SMC works the same way in every single market and on every time frame. While the core principles of liquidity and market structure are universal, their application can vary significantly. An order block on the 1-minute chart of a volatile crypto asset is not the same as an order block on the daily chart of a stable Forex pair. Different markets have different personalities, different levels of volatility, and different session times when they are most active. A one-size-fits-all approach to SMC is lazy and ineffective. You have to adapt the concepts to the specific instrument and time frame you are trading, which requires a lot of screen time and experience. Before we dive in, let's outline the main reasons traders are losing money with smart money concepts. In this section, we'll cover the lack of a concrete trading plan, poor risk management, chasing trades and confirmation bias, lack of patience, and the failure to track performance with a trading journal. Now, let's break down each of these critical pitfalls. The number one reason is a complete lack of a concrete trading plan. A lot of traders learn to identify a few SMC patterns and then just start clicking buttons. They don't have written rules for what constitutes a valid setup, how they will enter a trade, where their stop loss will be placed, or how they will manage the trade once it's active. Trading without a plan is like trying to build a house without a blueprint. You might have all the right materials, in this case SMC knowledge, but without a structured plan, the end result is going to be a mess. The second major pitfall is ignoring risk management. This is the boring part of trading that nobody wants to talk about, but honestly, it's the single most important factor for survival. You might see SMC gurus talking about 100-to-1 risk-to-reward trades, which sounds amazing, but it encourages a gambling mindset. New traders start risking too much of their account on a single trade, hoping to hit a home run. When that perfect order block setup fails, they take a massive hit to their capital. Without strict risk management, like only risking 1% of your account per trade, it only takes a few consecutive losses to wipe you out completely, no matter how good your strategy is. Another common failure point is chasing the market and forcing trades that aren't really there. The desire to be in a trade and make money is powerful. A trader might see a price move that looks like an SMC setup and convince themselves it's good enough. This is called confirmation bias. They start bending the rules of their strategy to fit what the market is doing, instead of patiently waiting for the market to present a clear, high-probability setup that fits their plan. Patience is a virtue in trading, and with SMC it's absolutely critical. The best trades are often the ones that are obvious, but you have to be willing to sit on your hands and wait for them. Finally, a huge number of traders fail because they don't track their performance. They don't keep a trading journal. A journal is your personal feedback loop. It's where you record your entries, exits, the reasons for taking the trade, and your emotional state at the time. Without this data, you have no way of knowing what's working and what isn't. You can't identify your recurring mistakes or find patterns in your successful trades. You are essentially flying blind, doomed to repeat the same errors over and over again. Taking the time to journal and review your trades is what separates the amateurs from the professionals. Before we dive in, here are the main subtopics we'll cover in this section. What SMC really is and what it isn't. The importance of experience and structure. Why patience and discipline are crucial. And how SMC fits into the bigger picture of trading success. Let's be crystal clear. Smart money concepts are not a complete plug-and-play trading system. It is a set of analytical tools. Think of it like a high-end power tool. In the hands of a master craftsman who understands how to use it, it can help create something amazing. But if you give that same powerful tool to someone with no experience, no training, and no respect for the risks involved, they are far more likely to hurt themselves than to build anything of value. SMC gives you a lens through which to view the market, helping you identify potential areas of interest, but it doesn't tell you exactly when to pull the trigger or how to manage your risk. The real secret to making SMC work is integrating it into a comprehensive trading plan that you have built and tested yourself. This means you need more than just the ability to draw boxes on a chart. You need a structure. This structure must define everything: which market conditions you will trade in, trending or ranging, which time frames you will use for analysis and execution, and what specific confirmations you need to see before you even consider entering a trade. For example, you might decide to only trade order blocks that align with the higher time frame trend and wait for a lower time frame shift in market structure as your final confirmation signal. Furthermore, patience is the ingredient that most aspiring SMC traders are missing. The market doesn't generate A-grade setups every single day. There will be long periods where you just have to sit and wait. The temptation to force a trade on a mediocre setup is immense, especially when you feel like you need to make money. Successful traders understand that their job is not to trade all the time, but to wait for the easiest, most obvious opportunities. They are professional waiters. They are perfectly comfortable closing their charts for the day if none of their strict criteria have been met. This discipline is what preserves their capital and their mental sanity. Ultimately, you have to realize that SMC is just one piece of a much larger puzzle. The other pieces are robust risk management, a strong trading psychology, and unwavering discipline. You could have the best market analysis skills in the world, but if you can't control your emotions or manage your risk, you will fail. Stop looking for a magic wand or a holy grail strategy that will do the work for you. Instead, focus on building yourself into a well-rounded trader. Use the concepts from SMC to build your analytical edge, but dedicate just as much, if not more, effort to mastering risk and developing the mindset of a business owner, not a gambler. In this section, we'll break down the main habits and strategies that set successful SMC traders apart. We'll cover multi-time frame analysis, specialization in markets, the importance of patience and confirmation, the power of journaling and review, and how these traders continuously refine their edge. So what separates the traders who succeed with SMC from the vast majority who struggle? First and foremost, profitable traders don't just stare at one time frame. They use a multi-time frame analysis approach to build a complete picture of the market. They might start on the daily or 4-hour chart to identify the overall trend in key areas of supply and demand. This is their narrative. Once they have a high-level bias, say they believe the market is bullish, they will then zoom into a lower time frame, like the 15-minute or 5-minute chart, to look for specific SMC entry patterns, like a break of structure and a return to an order block that aligns with their overall directional bias. Another key habit of successful traders is that they don't try to trade everything. They specialize. Instead of jumping between dozens of Forex pairs, cryptocurrencies, and indices, they focus on mastering just one or two markets. This allows them to develop an intimate understanding of that asset's unique behavior. They learn its rhythm, its typical reaction to news events, and the times of day it has the most volume and volatility. By narrowing their focus, they reduce the noise and can more easily spot high-probability setups that align with their plan. They choose quality over quantity, which is a hallmark of any professional. Successful traders also practice extreme patience and demand confirmation. They don't just blindly place a limit order at an order block and hope for the best. They wait for the price to actually reach their area of interest, and then they wait for the market to give them a clear signal that it's ready to turn. This could be a specific candlestick pattern, a market structure shift on a lower time frame, or a volume spike. This act of waiting for confirmation dramatically increases the probability of the trade working out. It helps them avoid catching a falling knife and ensures they are entering when momentum is starting to shift in their favor. Finally, and this is non-negotiable, every single successful trader I know is meticulous about journaling and reviewing their trades. They treat their trading like a business, and a journal is their performance report. They track every detail, the setup, entry, exit, risk to reward, and even how they felt during the trade. On a weekly or monthly basis, they review this journal to find their strengths and weaknesses. This data-driven approach allows them to systematically eliminate mistakes and double down on what works. They aren't guessing, they are continuously refining their edge based on cold, hard facts. This commitment to self-improvement is what ultimately leads to long-term, consistent profitability. Thanks for watching today's video on Wealth Nest. I truly hope you found value in it. So what was your biggest takeaway? Let me know in the comments. If this helped you, just smash that like button, subscribe, and tap the notification bell so you never miss the next trading insight, tool, or tip. We're building a focused trading community, one smart decision at a time. Wealth Nest, build, trade, grow.